want to welcome you back for the continuation of the investment video cast. And what we're going to be covering here are trading securities and available for sale securities. And the first part is going to be for stock, and the last part will be for the bonds part of it. So to start with, on 6/30/15, we purchased trading securities for $6,000 here, and we purchased available for sale securities for $9,700. So our entry would be an investment in trading securities for $6,000 and investment in available for sale securities for $9,700, and the cash will be those two added together. Okay. Now, remember, these have to be recorded at market value on the balance sheet. They're put on the balance sheet at market value. So trading securities, we can see went from $6,000 to $7,000 right here, which means it increased by $1,000. So we want to increase the account by $1,000. So we debit investment in trading securities for $1,000, and we credit basically an unrealized gain or unrealized holding gain or loss on trading securities. Now, this goes on the income statement as an unrealized holding gain or loss. So that will be on the income statement, which means at year end it goes into the retained earnings because it's closed out into retained earnings. The investment account now will be on the balance sheet for $7,000. The available for sale securities cost us $9,700 is now worth $8,500. So that's a decrease of $1,200. So basically, we would have a unrealized holding loss, where we use a gain or loss on available for sale securities for $1,200, and we would credit the allowance account for $1,200, which means down here in the allowance account, we got to keep track of this one. That's why I have a T account down here for $1,200. This is a debit, credit, and a balance. Okay, so that's $1,200 for that, because that means it went down by $1,200. On the balance sheet, we would actually show $8,500 for the value of the available for sale securities. Now, the unrealized holding gain or loss also goes there as under other comprehensive income. Okay, so it doesn't go on the income statement, it goes on the other comprehensive income. So right now we have values of $7,000 and $8,500. In 2016, we look at the new balances, values that we have, market values, and we see trading securities went down $200. So we want to debit the unrealized holding gain or loss, because that's a loss now, and we would reduce our investment for $200. This also goes on the income statement as a unrealized holding loss for the trading securities of $200. It's closed into retained earnings at the end of the year. On the balance sheet, we would show $6,800 as our investment account in trading securities. For the allowance for the available for sale securities, we was at $9,700. We're now at $9,300. So that's a change of only $400 decline. So we want to credit the allowance account. We want a balance of $400 or a difference of $800. You can also, take the difference between these two. It went up $800. So that would say so the allowance account we need to decrease by $800, and that would show a gain of $800. Again, this is on the unrealized holding gain or loss is other comprehensive income. And on the balance sheet then we would show $9,300 for our investment account. Okay, so you continue this on year after year end. You'd look at your balances at the end of the year and adjust accordingly. Okay, now we're going to do a little different. Let's say we actually sold them in 2017. We sold the trading securities for $6,900. Okay, so we just put that down as $6,900, and the cost for our investment account is $6,800. So we would actually have a $100 gain. Now, this is for financial reporting. This is not for the income statement, the income tax. That's a different class. This is strictly financial. Okay, so $6,900. We look at our balance $6,800 because that's what we have here is our balance in there. So we have $6,800 in there. Now, for the available for sale securities, we sold it for $9,500. The investment account still is at $9,700 because we haven't changed it because it has the allowance account set up. So that's a loss of $200, which is the difference. But because we have this allowance, none of them have been closed out, we now need to close it out because we no longer have that account. So the allowance for change in fair investments is fair value of investments is $400, and we credit the unrealized holding gain or loss on trading securities. Okay, let's do it for the $400 to make it balance. It makes it a little bit nicer. Again, we close this account out then, so if you want to, we have 400 up here, which then gives us 0 for the balance. Okay, so that's how you record it, and that's also the sale of the trading securities and the sale of available for sale securities. Trading securities, you look at your balance that's in the account. Available for sale, you always take it out at cost, and what you sold it for is the difference in gain or loss. And then you close out the allowance account and the unrealized holding gain or loss account. Okay. Next one we have is on the next page. This is for bonds. Say available for sale. So what we have on this one, on January 1st of 2015, we purchased $65,000 of bonds. The face value is $70,000. The bonds paid June 30th and December 31st. Got a stated rate of 10%. They have a 10-year life, classified as available for sale. So they're not held to maturity, they're available for sale. And we're going to use straight line to amortize the discount. Okay, so we paid $65,000. So that's what would go in there. The cash that we received, well, if you want to do a calculation for it, is we purchased face value $70,000. Stated rate is 10% divided by 2. So it's $3,500. Okay, so you figured that out. So it's 70,000 times 10% divided by 2, because you always go by face value times the stated rate, and it's semi-annual, so divided by 2. Okay, that's the 3,500. Now, remember we're doing the investment account, the straight line method. So we paid $65,000 for them. 70,000 is face value. So that would be a difference of, we have 5,000 divided by 10 years, so divided by 20, it's $250. And the interest earned then would be, because this is at a discount, so maybe it increases it, so the interest earned would be these two added together at $37.50. Okay, and then this entry, because it's straight line, is going to be the exact same thing, $37.50. Okay, that's for the year. Now, on this one it says assume the fair value is $67,500 on December 31st, 2015. And the carrying value now would be $65,500, because we have to add that 250 and 250, so we had the 500 there. So instead of 65,000, we now have 65,500, because remember we increased the investment account. Okay, so what we have here is 65,500, and the fair market value is 67,500. So if you want to, you take 67,500 minus 65,500. I can type right, so it'd be $2,000. Okay. And that's what you do for the available for sale securities if it's a bond. You also do the same thing if you're doing a trading securities. So that hasn't changed any. Okay. So that is those two deal with the trading securities and available for sale securities. The first part, this part over here, was for the basic for the stock, and then this one is for the bonds. For the either do it trading or available for sale, doesn't matter. Okay, so the next one we're going to do is reclassifying stock. if they start off as available for sale and they go into a held to maturity or something like that, we're going to redo that one. That's in the next video. So hopefully this helps for this one, and I'll talk to you later.